Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, August 5th, 2022. I want to get this video out because I think it's timely. There's that IWM chart, the bounce that I was looking for. You know, dip buyers have been doing this long enough. After a trend like this, uh, they can't help themselves. So it was about near 100% certain that you're going to get buyers that come in and bought the big gap down. You know, IWM gap down. You have to zoom in here. Yellow lines of the close. We gapped down, and then went just a little bit more after the gap. That was about 1.2%, and so you're going to get the dip buyers come in, and this is where if you weren't trading pre-market with the you saw the RTY, the futures breakdown or IWM, you would have saw the gap down. That's what you want to buy. You want to wait for the dip buyers to come in, buy it up. Probably, they just turned it green, and now where to? Well, you could get a back test of the wedge. That'd be a max bounce target. But I think right about here where we turn green is an objective level to, if you were waiting for this setup to trigger an entry, to take it here as we push green. Because again, it's all about RR. The risk reward is very low. Here's the first target on IWM. Remember, I have some what I call micro targets or near-term targets on RTY. But from IWM down to the first target, it's about 3%. And if we go all the way back down to this trend line, you're talking about a move. Well, the trend line is going to come in around that 173-ish support. That's about 8.75%. And so if you're swing trading and you're going to shoot for that, then you give yourself that's roughly a 9% drop. You could give yourself a 3% stop loss, which is way up here. And let's look at the daily chart and see what that would look like. You'd be up here somewhere. Actually, no, 3% from where we're at right now is going to be, and I just want to take a look at this, make sure it looks good. Yeah, right there, right about this previous reaction low. Zoom in here, you can see this little area of consolidation. That's certainly resistance right there. So there it is, about 196.50 is that resistance. There's your 3%. Or you go for one of the shallower trades here. Let's pull up RTY. Look at that. There's RTY. There's that again, beautiful, just textbook bearish rising wedge pattern. And again, there was the breakdown. It occurred on the strong jobs report this morning. And again, you got about a near certainty in an uptrend like this that dip buyers are going to jump in like Pavlov's dogs and buy that dip. So now you have an opportunity to short at a much more favorable level. And there's all the near-term targets, and then mid-range there, which I would say we have a very good shot of hitting that, and a decent shot of coming back down to these trend lines before the next leg up. So I still remain, still have some potential a little bit higher upside targets on the indexes here, and in the intermediate term, meaning weeks to possibly months, and then also longer term downside targets when we're looking out, months plus. All right, so that's RTY. I'll just cover the Qs for this, since we're here on the video, and we'll keep it limited. We'll keep this video short. I'll get it out to you. There's NQ, the Nasdaq 100 futures, with its comparable 60-minute bearish rising wedge pattern right there. The breakdown, see these two reaction highs. That was a natural support level for buyers to step in, 13,103. And they did, and again, I'd say the bounce is about over. Maybe a back test, but this is certainly objective time to add. Next target would be, well, it's a target zone, but that's where you can see on the crosshairs. That's about 12,825. Very good chance of that being hit, and then even a pretty good chance of this one being hit as well. So if you want to kind of preferred near-term target for next week, I'd say right here that 12, we'll call it 12,700 in NQ. That's probably going to approximate the measured target for this wedge right there. The widest, well, there's the widest part of the wedge added to where the wedge breaks down. That's about comparable right there. So, and that would be from where we're at right now. Took a shot, give you a drop of about. I'm trying to measure it here. 4%. Yeah, about 4%, a little over 4% there. And then one last thing, and just take a look and show you what I'm looking at on the components of the Nasdaq 100. So there's the wedge on QQQ. There's the breakdown, little snapback rally right there. You can see, targets, max, well, anyone, not max bounce targets, but potential bounce targets if there's a little more upside. It would be the a close of the gap, which is right there about 324.34. That's yesterday's close. That would be a backfill of the gap, and that also come in with a back test of the trend line as well. So certainly an objective level there to short that in that area right there. And the targets. I've gotten this out to you right there. Max target be again the uptrend line off the lows right there. Which also comes in right around that 296.35 level. And here's the look at the top components. Apple, obviously the leader of the pack, strong one. I'm not crazy about the trend line because it was violated there, but we do have some price resistance, and most importantly, you've got this divergence, and it's starting to steepen at this point. In other words, it was flatline divergence, roughly equal highs in the indicators back here against higher prices. That's still negative divergence as long as you have higher prices and equal or lower highs in the indicators. But now you can see the indicators. The momentum is really starting to wane, as shown by the divergence, the slope of the divergence line starting to steepen there. And that's Apple. Microsoft, nice 60-minute negative divergence. With a breakdown candle today at the open, gap down, and same story. So there's one that's on breakdown. Let me just give you no check mark. Let's just say no check mark for Apple yet, but let's give that a check mark for Microsoft. Amazon, definitely a check mark there. It's a nice clean bearish rising wedge, check mark there for a sell signal, that is. I'm going to lower this line. That was my third target before. Remember, we hit that, traded around it for a while. But at this point in time, when we consolidated and traded around it for a few days, you set up the kind of the floor right there. So traders are going to be looking at that. And this is how I think Amazon will, if you're looking for a pullback short trade on it, come back down there to about, give or take, 134 or so. And then, of course, if that gap is entered, you'd probably get the buyer stepping in at first, but if it is entered, then it good chance it'll be fully or partially backfilled. Tesla, kind of one of the stronger ones lately in the top holdings in the Nasdaq 100, but you've got that little wedge right there. I'm not crazy about that uptrend line. That's why I didn't have it there before. This is my primary preferred uptrend line on the 60-minute chart, and it's also a potential pullback target where I think the buyers will step in on the initial tag, but you had some divergence there at the recent high as well. If Tesla happens to push up more, you've got resistance here, and that's a possibility. I could see decent odds that we get a little more upside there, and if that would also mean the market's going up a little more. Tesla's not going to do this with the Nasdaq 100 doing this at the same time. So if we get marginal high, let's say we come in and back test those trend lines from below on QQQ and IWM, then you could see a little more upside, but that's pretty big resistance there for Tesla, and it's going to only extend these divergences. If it happens soon, as in early next week or so, you're guaranteed to have negative divergence because these indicators are lagging that much. Alphabet on the 60-minute chart still in this big old box here, this trading range. Let me change my tool to a box tool. You can see there it's playing ping pong off these levels. Been highlighting these for a while. Boing, 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 boing. There's your trading strategy, and it works until it doesn't work. Sooner or later you get a breakout in one direction or the other, and that most likely determines the next tradable trend for Alphabet. Until then, you just play ping pong, meaning sell rallies into the top of that zone there, and or short, and then cover those shorts and or go long at the bottom. It's getting long in the tooth. I can just tell you this, that it's not likely to continue for much longer. Rarely do you see such a big stock like this continue to bounce in such a big range. But as I often talk about, that's powerful stuff there. I always use the analogy, it's like a coiled spring building energy, when you take a spring, you're compacting it, pressing it down. That's kind of what happens with stocks when they have these well-defined ranges, because when you finally break out, forget about, other factors there. If nothing else, technical analysis, get everyone seeing the breakout. This consolidation range here is obvious to a blind man. Um, you can obviously, look at the chart. I think even if you turn off the lines, that stands out. So I think there'll be a lot of traders that will take a breakout on either direction. And, one thing about them is recognize a whipsaw if you get one. In other words, an upside breakout, probably look convincing. And if it sticks, great. And if it back tests the top of the range, great. But if it breaks out and fails, and I'll give you right now, that's my thoughts. Because if it breaks out, we're getting close, as I've been saying, to my max targets that were, from all the way back here, which were the 200-day moving average. It's a range between the 200 exponential, which we almost hit on QQQ, the trend line, which is a hair above as well, and then the max is the 200-day simple moving average. And so it's a fairly wide range, but not too much, from, again, compared, from the whole move up there. Again, that's my range as of now, and I still think we're likely to see a thrust back like that, and then one more thrust up is my preferred scenario. And whether these sell signals today stick or after the back test, we'll have a better idea. Well, we'll see. By the end of today, maybe, but they'll probably keep everyone guessing because, of course, it's Friday. Tend to get these big moves or setups that happen on Friday, and then keep everybody guessing over the weekend. And then by next week, we'll most likely have an idea whether the market has the power to shrug off these divergences and these sell signals and just continue to power on up. But again, I maintain what I said yesterday in the last couple of days is there's a downtrend line, and that's a big one, and price resistance as well. So to me, the risk reward is favorable to be short now or start scaling into shorts or taking profits on longs, because I think the upside is minimal at this point. You can see from the pop-up box to the left, maybe about 1.8%. We'll call it 2% upside. Compared to the potential for about 8, almost 9% downside. And that's about it. Let's leave it there. See where we go from here. See how we close the day. Again, you're getting these gaps close to being backfilled, not all the way yet on QQQ. They did it on IWM. And you've got both the gap and the uptrend line right here at the bottom, a back test of the wedge to give you an objective short entry if you want to take a shot there. This has been Randy Finney with Right Side of the Chart. Have a great day.